Hi, this is Bill Cobb from Baton Rouge HousingReports.com, local appraiser. Wanted to show you what pretty much a classic declining market is in the Greater Baton Rouge market. Uh, this could be a market where there might be a lower, what's termed a low appraisal um, situation. But I wanted to show you what's been going on. We're looking at right here the Baker, a map of the Baker marketing area. Uh, since 2008 and the meltdown that has taken place nationally and in some places locally, not all. We've weathered this storm pretty well in Baton Rouge. But Baker was one of those markets where there was a lot of housing that was absorbed, a lot of vacant lots that were built on after Hurricane Katrina in 2005, and the prices went way up. It was a real estate investor's heaven, and the what has taken place since then has not been pretty for that market at all. Baker has been very hard hit in the foreclosure arena. Um, in this particular study, we're looking at the Fannie Mae 1004 MC. What we're dealing with is a 2,200 square foot home in the Baker Hills subdivision. When we're talking about 2,200 square feet, we're not talking about the entire Baker market. Fannie Mae has the appraisers looking specifically at a bracket between there of maybe 300 square foot lower than 2,200 and maybe 300 square foot higher. So we're not looking at the entire Baker market. We're looking at the homes that would be comparable to a 2,200 square foot home built in around 1980 with 3 bedrooms, 2 baths, and it has a very nice addition plus 2-car carport behind it. I can't really show you the address or tell you the specifics about the house because it's under contract right now. It is a foreclosure, and it is selling low. It's been neglected, for several years. Anyway, as we proceed right here, first of all, we're going to look at the chart right here to show you what a classic declining Greater Baton Rouge housing market might look like. This right here, if we go and we look at December of 2010 to December of 2011, November 2011, we're looking at a minus 7.3% median sales price decline. That's based upon comparable sales for a 2,200 square foot home. I think because the home was really kind of overbuilt for this market, for this particular subdivision, I might have used homes between 1,600 square feet and maybe 2,500 square feet. But we're looking at about a minus 7.3%, and a lot of that has to do with just the very high foreclosure activity in that market. Here's what I mean right here. Since 1/1 of 2009, there's been 21 competing solds that were foreclosures. There's been 64 total sales that were competing, but of those 21, or right at 33% of those, were REO or foreclosure. That means that 33% of the market, the solds, have been foreclosures, which is extremely high. I think maybe in Baton Rouge in general, you might be looking at maybe 3 to 5%. This is around 33%. This is very high. So you're looking at a minus 7.3% decline in the median sales price. That's pretty substantial. If we go to the appraisal that I was working on, this right here, if we go right here, right now there are 21 competing properties that are offered in that market for sale, and anywhere from 49.9 to 139.5. That's a huge gap, and there's only been 15 sales in the past 12 months, which shows that right now we're in an oversupply. There's more properties available in the market that have sold even in the past year, so that's an oversupply. If we go to the neighborhood section right here, we have declining median sales price. We have an oversupply, which I just showed you, and the marketing time is over 6 months. This particular home is on the market for probably for 215 days. There's been several of the comps that were used. I think that they were 10, 134, 41. I think that this one was 131 days on the market and 247. I think two of the listings that I used in this appraisal were on the market for 200 and something and 363 days. So this is fairly serious. In the neighborhood section, we said very slow sales, which there's very slow sales. If we go to the 1004 MC, it will show you that the sales 7 to 12 months ago, 4 to 6 months, and the current 3 months are 7, 5, and 3. That means the sales are slowing. The absorption rate is slowing. The total number of comparable active listings is increasing. 10, 12, and now it's 22, 21, 22. So that means it's increasing. That's not good. Monthly housing supply on the market was right at 9, 7, and now 22. That's increasing. That's not good. The median comparable sales price is declining, 77, 94, and now 61 based on 3 sales. That represents foreclosure activity. The median comparable sales on the market was right at 161, 131, and 81. That's declining. That's getting better. The median comparable listing price 93, 115, and 88. That's declining somewhat. Median comparable listing days on the market 173, 130, and 71. That's getting better. The median listed sales price ratio is 100, 99, and 93. That means that they're getting much less than what they're asking for now in the last 3 months of sales, which shows a weakening market. Sellers are paying a very high price to sell their houses. 3.9%, 3.6%, and 2.7% in concessions that they're having to pay to get out of their houses. So that part right there is not good. But anyway, we have declining median sales price, 22 month supply. There's 21 competing listings, which is an oversupply. 93% listed sales price ratio, which is weak. In the Baker market itself, in 2011, there's been 6 sales with a median sales price of $62,000. That is very low. Generally, in this particular subdivision, you're probably looking at around 95 to 100, maybe an average. But because of the foreclosure activity in 2011, you're in the 62 range based upon 6 sales. So I mean, think about it. If you had a home under contract, for $120,000 in this particular market, can you see the weakness in the market, and can you understand why an appraiser would probably come in low on the appraisal based upon just how weak this market is and how pummeled this market has been in the foreclosure? This is not a market of strength. This is definitely a market of weakness. And this would be one of those markets where you probably would have a quote-unquote low appraisal. And it's not really a low appraisal. It's an appraisal reflecting the current market. Regardless if some homeowner wants to pay $120,000 for a house in this subdivision, right now the median sales price is 62. So this is what I would say would be a classic declining market in East Baton Rouge. Most of your subdivisions, most of your housing, is probably stable. It's still declining a little bit according to the Baton Rouge Business Report and CoreLogic, but we're not seeing double-digit declines or anything like that. But just wanted to show you this. Whenever I come across these kind of things right here that just kind of stick out to me, I want to make a quick video and present this to you. And this was a good case to do that. So appreciate your time. Thank you very much, Bill Cobb.